Today, folks, how much does this piece of real estate cost in the great city of Toronto up in Canada? What do you think? 700,000? Nah. 800,000? Not even close, baby. You might even think, heck, 1.2 million. What kind of house is this anyways? It's like 700 square feet. Hell no. This thing sold for $1.47 million. Baby. Today we are answering the questions you want to know about the great Canadian real estate bubble. Is it going to burst? Are we heading into some crazy cyclical downturns? I know a lot of stuff that just way too many people are not pointing out, and coming from a Canadian who lives here, who understands a lot of things, we're going to talk about Greenbelt. We're going to talk about supply and demand problems, interest rates, and where I personally see real estate going and what you should be doing if you're looking at a piece of real estate to buy right now. So in the clarity of my transparency, do the channel out, hit that like button, folks, and let's get right into this. So this house legitimately sold for $1.46 million here, guys. Unbelievable stuff. Everybody is just trying to wrap their head around how these condemned homes in the city of Toronto, and heck, even on the outskirts of the city, are selling for fortunes right now. And there's a lot of stuff in play here. So taking a look first at the average home sales in Toronto. Right now, I know there's these few exceptions in pocketed areas where these really tiny junky homes are selling for millions of dollars, but the reality is the average home price still really high at $933,000 on the average here, folks. And taking a look at the general rental prices, if you wanted to live somewhere around the city here, we can see for Toronto, average rent going into March of 2021 was around $1,808. Now, this is a one-bedroom apartment, and I think this is somewhat inaccurate because usually, like, one bedroom, you're probably talking about 500 square feet. There's no way for $1,800 you're getting a lot of space here. And for a two-bedroom, the average is $2,300. And again, I would speculate on these rental prices because anybody that knows what it costs to live in Toronto, you are getting no square footage for these prices here, folks. But let's first of all talk about the supply and demand problem, because most people don't even know we have what we call the green belt in Ontario here, folks. And I think it's also relatively across all of Ontario, or all across Canada, including Vancouver here. And this is one of the big problems holding up the entire real estate market that they will not change. This will never change. But no one ever brings this up when they're talking about real estate prices. And I'm affected by this drastically because I live on a farm with my parents well outside of the city. And we've talked about trying to sever our land up because it would make it worth millions of dollars. But unfortunately, where we live, which you can see is stamped with basically how much property you have to own before you can sever an acre off or a couple acres and build multiple properties. And unfortunately, we live in an area where if you have over 65 acres of land, you can sever 1 acre off to build a property or separate it from your own personal estate. However, we have 63 acres. We are 2 acres under the limit. And considering how big Ontario really is and the speck of a dot that we live in over here, it's crazy to me that they've really restrained. And this is a lot of problems. I mean, up in Pickering, many of you might not know these areas, Amazon was going to build a huge factory, and it was protested because they wanted to build it on Greenland. And yeah, it literally got dumped, even though that area is a crap hole, no offense, where they wanted to build it. And it was in a very industrial area where there's not like homes around, and it would have brought a lot of jobs, my personal opinion. But the Greenbelt is one of the primary reasons driving real estate up everywhere, guys. This is why we see condos going up and not suburbs going out. There are a lot of restrictions depending on where you live around the city of Toronto for how much real estate you can physically build. Now, if they ever diminish the Greenbelt, real estate would crash overnight. I honestly think this is one of the biggest hindering factors to the entire market, but not the only hindering factor. And I guarantee you, the government is never going to loosen the laws up on this, which is why we're going to see an explosive rate of condos going up. Now, let's talk about another issue, because it's not me or you raising the housing prices here, guys. It's the rich people. And I have some money, but I don't got that kind of money. But taking a look, guys, most people are aware that there's a lot of foreign buyers that don't even live in Canada buying condos up like candy and then flipping them or buying them for rental units. And what you need to know is the government, basically in 2017, but it was announced, I think, 2015, 2016 timeframe, that the Ontario government began implementing a 15% tax on foreign nationals who were purchasing a residential real estate property. The tax was designed to cool down an otherwise overheated real estate market in the GTA and the Greater Toronto Area. The 15% tax applies specifically to individuals who are not Canadian citizens or permanent residents of Canada. The tax would also apply to foreign corporations and tax trustees. These resident categories are defined in the Ontario government legislation. Now, this was the biggest joke, in my humble opinion, of the government just basically trying to make you feel better as a Canadian citizen. But the raw reality is, guys, most people don't even understand how the Canadian dollar works, because most foreigners that want to buy real estate here are working in another currency, okay? And these currencies fluctuate in value. Now, let's presume in 2017 here, in the bottom of the Canadian dollar, the government introduces a 15% withholding tax, which means if you buy a piece of Canadian real estate, you're going to pay 15% tax on that. But if you're using a different currency, and literally from 2014 timeframe going into 2017, the Canadian dollar dropped 27% at the bottom. So let's presume you have a US dollar and you're trying to buy Canadian dollars. And let's say the US dollar never changed, but the Canadian dollar dropped 20%. Does it really make a difference that you're paying a 15% withholding tax? It literally cancels itself out. So the government taxes you 15%, but what you're buying actually dropped by 20% in value from the currency conversion. It's so dumb to me how people aren't even aware of this problem, but literally this foreign income tax was a joke. It was a non-problem for foreign buyers, which is why we still see a flood of insanely wealthy people buying Canadian real estate here, folks. Now, let's talk about, is the market crash coming? I mean, so everything we just talked about here, guys, we're seeing really inflated housing prices. We're in record low interest rates. The green belt is never going to change those rules. I mean, on top of that, we're still getting a huge influx of foreign buyers, and the pricing has never really changed for them. And I'm here to tell you, absolutely not. And I'm going to tell you why I think we're never going to see a real estate crash here. I think it's more likely that we start becoming like Manhattan real estate in New York rather than an actual full cyclical downturn happening. And let me explain to you why I see it this way, because nobody explains this stuff. Every time I listen to the news, I listen to these bubble bursting paranoid people. And yeah, it's expensive here, guys, but it's expensive for these reasons. And it's also really interesting to me that, have you actually tried to buy a house? There is an insane amount of stipulations and rules, even from 5 years ago, and now they're making them even tighter and harder. I know somebody that had a 20% down payment on a $500,000 home, and they had to get their parents to co-sign for it. Their parents were worth millions of dollars on multiple pieces of real estate, and before they would allow to co-sign for that house, that property for somebody that I knew, they literally had to pay off their vehicles because the bank said, hey, even though your parents are worth millions of dollars, they have debt on cars and auto loans. So that's too risky to us. So if they pay their car auto loans off, hey, we'll let them co-sign for you to buy this house, even though I had a 20% down payment, which blew my bloody mind. And that was years ago. And they're continuing to tighten these restrictions because, as I constantly mention, it's not me or you raising the housing prices here, guys. It's literally just rich people who can already afford to get through these stress tests. And you can imagine if they're buying $1.5 million home, they're worth millions of dollars, guys. No, it's not the average Joe buying these homes. I'm telling you that right now. Now, another really important detail many of us overlook that will continue to drive the real estate market here is the insane amount of wealthy foreign people coming here, baby. They're all coming here. Canada's a great place. What can we say? It's a beautiful nation, right? A little expensive, beautiful nation, beautiful nation. But, however, we are growing faster than India is population-wise, and we are tripling, outpacing the United States. I mean, population-wise, guys, people are flooding here like crazy. It is great. It stimulates the economy. I really love this aspect of Canada, the fact that we are such a diverse nation. It's actually one of my favorite things. If you go down to the city, you can get every kind of food imaginable. India, Pakistani, Vietnamese, Chinese, and literally every kind of food exists within a block. And I absolutely love eating here in Canada. I mean, it's such a great place for just food and just culture in general. I love that about our country. But this is one of the primary reasons driving up the entire Canadian real estate market, because again, population density, the fact that we can't expand past the green belt, the fact that there's not enough homes going up. We have kind of a supply and demand problem right now that was pent up during the pandemic. And here we sit, guys, in this crazy market where real estate just exploded 20 or 30%. And this is why prices are getting so high here, folks. So in light of this, what do you do about it? Well, for me personally, if I was in the right situation, I may consider buying a piece of real estate, but honestly, I'm not in a rush. I'm a little bit younger than most people might be, and I know a lot of people will always press you into saying, you got to buy a house, you got to buy a house, but it comes really down to circumstances, really your personal circumstances. Do you want to start a family? Do you want to have a life? Do you have a really stable job? Are you married? Now, speaking from my personal circumstances, again, this is different for everybody. I'm only 28 years old. I've got over $250,000 saved up. Yeah, I could absolutely buy a cheaper piece of real estate on the outskirts of the city, but then I come into this situation where the rent will barely cover the mortgage. We're in a state right now where trying to get rental payments to actually cover these bills on these absurd prices is really hard to get positive cash flow out of a piece of real estate, which means you're really reliant on the equity of the house going up in value. And that comes with a lot of stress, a lot of work. You're fighting to keep the mortgage payments. You might have to rent it and live in part of it. I don't know. It's a convoluted mess that way for me. Whereas I'd honestly rather take my $250,000, and I am, and I'm investing it throughout the entire market. And I am investing it in Canadian real estate in a different way. We're going to talk about it in a second. My investments this year are going to cash flow me between $9,000 and $10,000 a month in dividends. dividends. This comes from the stock market, other investments, and things of that nature, guys. It really helps take some stress on my back, mitigates the volatility of my income since the pandemic happened, and that's just dividends and cash flow. If we talk about the equity growth of my investments, I mean, I'm seeing about a 20 to 30% increase a year in the equity of my investments, and on $250,000, guys, that really equates to an insane amount of value. I mean, we're talking about $40,000 to $50,000 in capital gains plus the $10,000 in dividends. I'm making almost a full-time income off my investments that would easily cover the rent and any other things that I have to pay for my expenses in my life. And to me, that makes me sleep easy at night. If I had to own a property and show up to work every day to keep that property and make the mortgage payments and deal with the stress and the repairs, guys, that's kind of annoying. Whereas if I just rent, use the investments I have to pay the bills, if toilet breaks, I call someone if I want to leave that property, I don't want to live there anymore, I want to travel more, I have those opportunities. But again, I don't have a family, I don't have kids, I'm not in that situation, which you might be, which could make it more considerable for you to buy. But again, just because I don't think the real estate here is going to crash, but I think we're going to maybe perhaps see a cooling down period coming in the future, because we know interest rates are eventually going to go up. Typically, for every 1% interest goes up, real estate kind of cools off by about 8 to 10%. But honestly, guys, I think that will be the best case scenario we're going to see, is we're going to see companies starting to deal with the supply and demand problem. So we're going to start seeing a massive amount of real estate getting built, and then we're going to start seeing more restrictions on who can get mortgage loans. When you include those factors and you just look at how things are set up here from the real estate market, it just doesn't make sense that it would crash. Maybe a cooling at best. Again, all the new buildings going up, which if you live here, I'm sure you're seeing the mass amount of buildings going up like there's wildfire. Population growth is insane. I mean, just be patient here, guys, and just watch, because like I said, I think we could see a petering off, but there ain't no way I think we're going to see a 30, 40, or even a 50% kind of correction in the real estate market like a lot of people are predicting. And they never talk about all the stuff I've mentioned in this video. So if you appreciate it, hit that like button, folks. But what am I investing in for the Canadian real estate market? Where do I see deals? Well, if you truly believe in the Canadian real estate market and you want to get cash flow out of this market, guys, but you don't want to put in the work or the headache, look at REITs. But somehow this 20 or 30% increase we've seen in the real estate market never hit REITs for some reason. The fact that these REITs are really showing a strong tenant basis, all of the ones I'm going to show you here are still achieving over 90% rent collection. They haven't really done any severe dividend cuts. I mean, RioCan cut its dividends slightly, but just take a look at these REITs. You got RioCan, Smart Centers, H&R, guys, Brookfield Partnered Properties Limited here or whatever. Anyways, these are all real estate investment trusts that are paying over 5% yield, which means you've got $100,000 and you plopped it in Smart Centers tomorrow, you'd be making about $6,600 a year in dividends, guys. So could you imagine buying $1 million piece of real estate, and instead of having to deal with all the bull crap that comes with buying a stupid little tiny house like this, they literally, if you just put it into one of these really super stable REITs that own a lot of properties around Toronto, and again, collecting most of their rents, would be making you over $60,000 a year in income, guys. I mean, you could literally put all of that money into one of these real estate investment trusts and then use that leverage to buy a house that you actually want to live in, like buy it, and then just use that REIT to cover the mortgage and the payments. I mean, to me, that seems smarter than trying to buy a property, fix it up, try and rent it. And yeah, you might argue the fact that you would have done really well over the last year buying a house and property, but it's kind of gambling because you're speculating on the asset prices. And again, I'm honestly going to say I don't think things are going to crash. I think in the next, and then quote me on this, guys, in the next 6, 12, maybe 2, 3 years, we're going to see a relative cool off period because of the explosion we're seeing in condo buildings and just trying to deal with the supply and demand problem. So just take a breath, guys. Don't rush into this market. Don't feel like you're missing out. There are opportunities still in this market from the stock market and from other aspects of the real estate market. And I would just take this market with strides. But that, however, is me. And that might not be you. So I pass the question off to you. What do you guys think about this Canadian housing market? Do you think we're bubbling? Do you think we're going to burst? Do you think the government might loosen up the Greenbelt laws, which I think would immediately crash the market? So keep that in mind. Anytime you're worried about housing prices, just make sure they're not loosening the Greenbelt rules, because the day they do that, this whole entire bubble is going to burst. But I don't think the government will ever loosen those laws up. So in light of all this, again, let me know what you think in that comment section below, because I'd love to hear from you fellow Canadians. So stay cool, stay awesome. Can't wait to catch you tomorrow.